Hello, the rise in artificial intelligence isn't only changing software and semiconductors, it's changing the entire backbone of the global economy. Multiple industries are now undergoing a robust long-term growth cycle, from the improved memory and storage systems that power AI models to the crucial infrastructure that keeps enormous data centers running and even the energy systems that supply the electricity behind it all. So in this video, we'll be breaking down three important areas at the center of this transformation: improved semiconductor production, AI data center infrastructure and cooling systems, and big-scale power generation. These are the underlying layers that power the AI revolution, and they might be the next decade of market winners. Before we begin, make sure you subscribe so you don't miss out on additional deep dive breakdowns of the main factors affecting the stock market. This content is for educational and informative purposes only and should not be construed as financial advice or a suggestion to purchase or sell any securities. Now, beginning with the semiconductor and memory sector, one of the most important building blocks of artificial intelligence. One of the greatest winners from the artificial intelligence boom has been Micron Technology, ticker symbol MU, which has transformed itself from a classic cyclical memory chip maker into a key supplier to the AI ecosystem. The firm designs and builds memory and storage systems and is the sole US-based manufacturer of high-bandwidth memory, HBM, a crucial component used in high-end AI accelerators and data center infrastructure. Demand for Micron's HBM products has been phenomenal, with the company's 2025 HBM manufacturing now sold out and much of its 2026 capacity already spoken for. With the market moving from HBM3E to next-gen HBM4 memory slated to be used in the next-generation Rubin platform from Nvidia, Micron is well-positioned to further reinforce its competitive edge and grow its involvement in the AI supply chain. The market has taken note. Shares of Micron have soared as investors have become more confident in the company's long-term growth potential. The company's market cap has recently been hovering around $750 billion, and some analysts say it might ultimately enter the trillion-dollar club if demand for AI continues at its present rate. The financial performance has also been strong. Today, it produces revenues of over $58 billion a year and net profits of about $24 billion. Micron posted sales of $23.86 billion in its latest fiscal second quarter, up 75% sequentially, underscoring demand strength across its AI-related product range. Analysts say Micron is still in the early stages of a multi-year AI infrastructure cycle that could drive ongoing earnings growth for years to come. The most conservative watchers cite valuation issues, increased competition, and the cyclical nature of the semiconductor business. But for those investors optimistic about the ongoing expansion of AI computing, Micron is increasingly considered a play on a strategic 3 to 5 year investment opportunity instead of a memory chip maker. When Micron reports earnings again on June 24th, investors will be looking for more evidence that AI-fueled demand remains robust and that the company can continue turning that demand into faster revenue and profit growth. Vertiv Holdings, with the ticker symbol VRT, has become one of the most essential infrastructure players in the fast-growing artificial intelligence ecosystem. While many investors are laser-focused on chip makers and software businesses, Vertiv provides the key physical infrastructure that will be needed for AI data centers to operate well at scale. The company designs, manufactures, and services critical digital infrastructure solutions globally for data centers, communication networks, and industrial facilities. Its product line contains power management systems, uninterruptible power supplies, UPS, switchgear, energy storage systems, racks, and world-class thermal management technologies. One of Vertiv's primary benefits is its position in supplying coolant distribution units, CDUs, that feed liquid cooling straight to high-performance AI servers. With hyperscale data center operators continuing to invest billions of dollars in AI technology, Vertiv's cooling and power solutions have become even more crucial to these installations. The company's financial performance is a testament to this expanding demand. Vertiv has almost $10 billion in yearly revenue and nearly $2 billion in profitability, showing that it is not only a growth story, but also a successful corporation that has a tremendous industry tailwind. Investors have applauded this success, with the stock climbing about 33% in recent months as confidence in the AI infrastructure build-out continues to grow. Management expects organic net sales growth of 20% to 24% in the second quarter of 2026, driven by strong worldwide demand for AI-related infrastructure. Analysts have turned more positive, pointing to Vertiv's growing international footprint and strong position in the AI data center industry. The company's next earnings report is on July 29th, and investors will be excited for it. This has led to mounting expectations that Vertiv could announce additional strategic collaborations and contracts related to large-scale AI data center projects, which would add to its appeal as a key winner from the ongoing AI investment cycle. Still, the investment thesis on Vertiv is strong. The demand for improved power and cooling solutions is expected to grow significantly due to the increasing use of AI and the rising in for high-density computing infrastructure. Instead of competing in the AI race with chips or software, Vertiv provides the critical infrastructure that powers wide-scale AI deployment. Constellation Energy, with the ticker symbol CEG, has positioned itself to become one of the most strategically important power producers in the U.S., particularly with trends like artificial intelligence, data centers, and electrification leading to a surge in electricity demand. The firm develops, owns, and operates a broad portfolio of energy assets across the United States, offering electricity, natural gas, and energy-related services to utilities, municipalities, cooperatives, and commercial, industrial, public sector, and residential clients. Its power portfolio includes nuclear, wind, solar, natural gas, and hydroelectric plants with a capacity of more than 31,000 megawatts. Constellation's differentiator is nuclear energy leadership. The firm is the largest operator of nuclear power facilities in the U.S. and has ownership stakes in more than 20 reactors. As power demand grows, grid managers are seeking stable, carbon-free baseload power, and nuclear power provides that, making it an increasingly attractive tool to run AI infrastructure and large-scale data centers. One project that is being keenly monitored is the proposed restart of the 3 Mile Island nuclear plant. The project, if it can be returned to service, may offer long-term producing capacity at a time when demand for reliable power is forecast to climb substantially. With new power-hungry industries coming online, every incremental megawatt of baseload demand added to the grid is good news for Constellation. The corporation is still in good financial shape. Constellation has about $30 billion in annual revenue and nearly $4 billion in net income with a market capitalization of about $95 billion. The company posted adjusted earnings per share of $2.74 in its latest quarterly results, beating analyst estimates, and reaffirmed its fiscal 2026 earnings projection of $11 to $12 per share. Shareholder-friendly capital allocation efforts also serve to reinforce management's confidence in the company's long-term future. Constellation recently announced a secondary offering of around 11 million shares at the same time, authorizing a sizable share repurchase program of approximately $3 billion, which might assist in sustaining earnings growth and shareholder returns over time. Wall Street remains broadly constructive on the stock. Some analysts are still bullish, with targets as high as $516 a share, a bullish view that hinges on the company's unique nuclear asset base and its potential to power the next generation of AI-driven infrastructure. But the stock has fallen behind some of the broader alternative energy space of late, partially due to regulatory delays, uncertainties around future power contracts, and investor concerns about the timing of large growth catalysts. Moreover, it should be stressed that nuclear energy projects are still largely dependent on regulatory clearances and policy changes, and hence government decisions will heavily influence the company's future growth path. There are certain hurdles, but Constellation Energy is a compelling long-term prospect. The company's deep nuclear fleet and diverse generation mix make it one of the biggest winners of the growing need for reliable, large-scale power generation in the U.S., as demand for electricity increases from artificial intelligence, cloud computing, industrial reshoring, and other electrification trends. Thanks for watching. If you found this analysis useful, make sure to subscribe for additional insights on significant market trends and new industries impacting the future.